So a while ago, I created a video talking about the 18 mistakes that you can make when putting together your property tax return. And it was a long video, so I wanted to create a shorter video. But if you want to watch the whole video, I will put a link in the description box below. But here is just a sample of the property tax mistakes that you can make, which you can pretty much avoid. Loan interest and finance costs. So we know that Section 24, mortgage interest relief cap, tells us that we can only offset the allowable cost. Now, we're talking about the 2021 tax return. Ultimately, you're in a position whereby your amount of money that you can claim against mortgage interest is zero. So ultimately, you've got to look at this loan, other finance costs. But what people don't do is that they think that Section 24, especially accountants, right? They don't ask you what your properties are. So they just say, okay, property portfolio, bang, bang, bang. Okay, so it's all residential, right? They don't ask you, they just tell you, they'll just assume it. Now, you could have a mixture of furnished holiday lets in there, you could have residential properties, you could have commercial properties, and the accountant in question could easily just go, well, no mortgage interest allowed. They'll blank it. And therefore, you will pay more tax as a direct result of you not claiming those legitimate costs against your income. Don't forget, Section 24, mortgage interest relief cap, only affects residential property. If you have furnished holiday lets, commercial property lets, ultimately, you can claim all the mortgage interest costs. But accountants who are generic just do not look at their tax returns. We only hire fully qualified accountants to do our tax returns. Who do you think is submitting your tax returns for you? Is it a qualified accountant? I doubt it. Especially when you're only paying £100, £200 for a tax return. They're not going to spend that much time on it. And therefore, you might be saving pennies, but paying in pounds for the amount of tax that you're paying. I'm hoping that I'm coming across rather strongly. All right, so let's think about something else here. Other capital allowances. Did you know if you have a furnished holiday let, you could claim capital allowances? Now, I've done a video on that, so it's worth checking out our videos on capital allowances. But ultimately, you could claim capital allowances on furnished holiday let, which is an extra cost. That extra cost will help you reduce your tax liability, but people don't do it. Equally, because of this COVID-19 coronavirus, everyone's working from home. Well, right now, I'm on a desk. I have furniture that I'm sitting on and I'm putting things on rather messily, if you don't mind me saying. But ultimately, those items, I can claim capital allowances against my property business because it's there for me to run my property business or to run my other associated businesses. So why am I not claiming those costs? Because I didn't think of it, right? So ultimately, you need to make sure that you're claiming it. No cost, no tax relief. Cost replacing domestic items, again, a section on the property tax return that I see people do not claim for. Now, you might have bought a property, and let's imagine you buy a property from a couple. Now, they're downgrading for one reason or another, or they're going to a residential care home. Now, they might choose to leave the furniture in there because they said, well, would you mind getting rid of it for us? Or actually, would you like this furniture? And you say, yeah, sure, fine. You're being nice. You're going to skip it anyway. But did you know that you could claim for those items if you do indeed replace it with new furniture, especially if you're doing professional lets or student lets as for a HMO? Not only that, which is another mistake that people don't think about when they're buying a property, they just look at the purchase cost of the property and say, right, okay, that's it. Do my SDLT return. And their solicitor won't bat an eyelid because, again, they're transactionally focused. They're not worried about how much stamp duty land tax. They're just going to use the generic HMRC SDLT tax calculator, which often produces the wrong results. So most time out of 10, I rather suspect that people are overpaying SDLT and, well, I'll leave it there. So solicitors do need some support from you if you are buying a property that has furniture in it, because those furniture items is called chattels, and you do not pay stamp duty land tax on chattels. You only pay stamp duty land tax on the bricks and mortar value. So have you overpaid stamp duty land tax? Well, I would rather suspect yes. And we've got other allowable property expenses. This field is in your tax return, but again, people are not claiming for travel costs when they go to see a letting agent, whether they go to see a estate agent, whether they go to a network event, education event, for the business, for the property business. You can claim these costs. If you are traveling out and you are out for a good period of the day to look at properties, to see tenants and letting agents, again, you can claim a value against the food you eat during the day. Use of home, furniture costs, and I put home furniture costs. What I mean by that is office home furniture, not the kind of furniture you have. Oh, can I claim my 72-inch screen TV? The answer would be no. I'm afraid no. Okay. But the furniture that you use in your home for business purposes, you can indeed claim that. So again, no cost claim equals more tax. And then we got residential finance costs not included in box 26. Again, people do not understand some of these numbers. So as a result, they don't fill it in, or they put in the wrong number. And what you need to be doing on here is, if you've got residential property, going forwards, you will need to put the full value of your mortgage interest costs in this box. Now, if you don't do that, you do not get the 20% tax relief. Now, I do a lot of tax consultations, and it's amazing when people say, but I didn't think I could get tax relief on the mortgage interest. What does that suppose? That presupposes that people are submitting their tax return, not completing this box, which means that maybe if they're getting £10,000 worth of mortgage interest costs, are they putting that £10,000 in this box, which means they can get, even, as a high rate taxpayer, you still only get 20% tax relief. But that's still £2,000 worth of tax that you have overpaid because you've not put in that number. Crazy. So just be careful with all these mistakes, which is costing people thousands upon thousands. And losses brought forward. Again, I've seen tax returns that they've done it one tax year one, let's say, they've got a loss of $2,500, which they could legitimately carry forward. And this is including the finance cost losses as well, by the way. And they put the new tax return in, and then they come to us and say, well, there's my second year tax return. Can you use that for the third year, which we then look after. And we look back and we say, well, you've got no losses. No, I've got losses, definitely. I've definitely got losses. It's not on your tax return. And therefore, those losses would not help reduce their in-year profits, which means no losses equals more tax.